How's it going, guys? Bud here for today. This is going to be my second analysis on Antshares. If you missed the first one, please visit the first one because this one will make some references to Antshare analysis part 1. All right, in this video, we're going to talk about some key figures, some catalysts, and a little bit about Antshare staking relating to NEO, which is the new shares. So here we go. All right, for the first thing is let's talk about some key figures and catalysts going forward. Now, one of the things that people may not be aware of is when Antshares first came out and it ICO'd, they made a commitment to hold off on the selling of the tokens, of the ICO tokens for Antshares in the open market until 1 year later. So in Q3 of 2017, which is right where we're at right now, about 50% of the Antshares will unlock. And this is very similar to stocks and stocks specifically when they have an IPO come out. Rather than try to unload all the shares in the open market, they time it so that people get restrictions on when they could sell or not. I think this is a really great idea because if you're able to restrict that stock sale as long as possible, you know that the price will not depreciate and you can reward some of the investors that first came in. Now, with that said, that is not to say that the price won't be depressed. The price will most likely be depressed from July to September. So if you're looking for some bargain hunting, that's probably the time to go ahead and pick up some Antshares. So in terms of catalysts, the timeline kind of fits a little bit after September, possibly going into the beginning of 2018. So this is usually the time to begin to accumulate some of this. The second thing I want to mention is in terms of catalysts going forward is that the Antshare company itself, also called NEO now, has about $325 million worth of funding. Now, that is enough for pretty much a lot of partnerships and a lot of movement into the crypto space. And one of the things that's really important, especially when investing in cryptocurrencies, is how much money these companies have to be able to keep their costs going. And what I like about Antshares is that not only do they have already a large sum of money to head start, but they're also pulling that money into other areas like the exchanges. Now, remember in the other video I was talking about Dash has an issue with making a partnership with these exchanges. And until they can get, for example, Coinbase on there, the price is not going to really appreciate because you're not getting that liquidity in. But NEO here / Antshares has figured out a way to do that. They're using their money and their contacts to create, to pretty much join in partnership with Binance. And Binance, if I'm pronouncing it correctly, is another type of exchange where it will only take first-class currencies. In case you're wondering what are those, one of them is definitely Antshares, the other one's Ethereum, and the other one's Bitcoin. And they do pairing with those. So if you sign on with your account, basically you're only going to see 3 of those. And I think Coinbase is trying to trying to copy Coinbase by just carefully selecting the coins that they offer. I think it's great because number one, it gives you trust and credibility that the coins they choose are the ones that are going to be holding steady for a very long time. At the same time, the partnership with them allows that liquidity. And I'm going to talk a little bit more about some of the advantages of having on this exchange versus having on Bittrex. Okay, the next part is going to be the founder of NEO. In this case, is going to be Dang Hongfei. Dang Hongfei is a very interesting character. He's a good salesman. I think he does a great job of going out there in Beijing and trying to drum up support for the company. When you're investing in cryptocurrencies, you always want to look at the leader, specifically the CEO and the founders, because these are the ones that are going to serve as a lightning rod for gathering up support. What you don't want to have is other people drumming up support. They're not part of the team. For example, if you're looking at how to invest, what's the vision, or where to invest, what's the vision for the actual cryptocurrency? If it's coming a lot from investors, then you know that the interests are not aligned with the company. But Dang Hongfei has done a really good job of that. Number one, he's really good about being transparent and open. As far as I know, now again, maybe some people, you guys may know this a little bit more than I do, but from what I'm reading and from what I'm gathering, it looks like his priority is to be transparent and open, especially in a country where it's a little bit closed. So I think he's moving in the right direction with that. Now, whether that's completely 100% true or not remains to be seen. The other one is that he's pitching this idea of what we call the smart economy. And the smart economy refers to using computers, using any sort of software to automate and to make things a little easier to do work on, especially for old industry. So I like the slogan, I like the branding that he has, and that it's not just a marketing gimmick, but he's using these buzzwords and these keywords that's maybe a little hyped up right now, but I think that's what we need to get going. The other one is that he's definitely one that has touted the importance of collaborating with central authorities. He's not one that's going to rebel against the system or an institution, but he's going to go ahead and say, you know what, we understand the role of government in the crypto space. We want to work with them, but at the same time regain our own independence and take advantage of the blockchain technology. So I think that's a good compromise, and that sends a very loud and clear message to institutional investors that NEO is a viable investment option. And the last one, which I really like, is these partnerships with Bancor, Grillo, CoinDash, Nest Fund, and Binance. These are very key partnerships that I think if you don't make early on, what's going to happen is your network is going to get smaller and smaller. And what you're seeing with some of the other coins out there is that they're not aggressively going out there to make these partnerships. Now, some people can argue, well, what type of partnership do you have with Bancor? Is that kind of conspiracy or whatnot? And the thing is that it's so early in the stage right now that these collaborations can go anywhere. It can go south the next day, it could be full on. But the fact is that he's making those connections and those partnerships is very, very important, especially with exchanges. And Bancor, again, is another ICO that's out there within the Ethereum network. So I do hope that, you know, we get something out of this one, and it's not just talk, but who knows, right? And taking a look at these, and the next one we'll talk about it is a little bit later. It's a very important entrepreneurial hub that they're using over there in China. All right, let's talk about the CEO of NEO and the founder of the Nest Fund. So the Nest Fund is these people are all interrelated, so their hands are going to be all over the place, and I think it's a very smart of them to do that because they're going to hold seats in Antshares and at the same time be part of these other companies. Now, it may create a conflict of interest in the future, but as far as now is concerned, I think it's better to be collaborative than being the lone wolf. Now, Tony Teo, CEO of NEO, he's not really the one who, he's also a founder of that Nest Fund I was talking about. He was actually part of the Ethereum's DAO and Investment Fund. So if you think about it for a second, he has a little bit of experience with investing large sums of money in Ethereum. He also the Nest Fund is basically also built on the NEO's blockchain. So what ends up happening is that they're using already the NEO's blockchain to operate their Nest Fund. It's almost kind of like, actually, let me correct that. He wasn't part of the Ethereum's DAO. I have to verify that fact here for a little bit, but he wants to operate it very similar to Ethereum's DAO, where they go ahead and do other investments in the blockchain technology. They want to improve on the DAO and learn from the mistakes of what happened with the Ethereum fork. So I think, again, it gives them a heads up for saying, you know what, these are the things we don't want to do, these are the things we do want to do, and just learning from Ethereum's mistakes, I think that's a very smart move. Now, the way they're going to do that is they're going to use what we'll call a global bounty reward for any hacker to find bugs in the actual code. So if you remember from the DAO hack, it was really because there was a software error in the code. Someone was able to siphon all this money away from the Ethereum network. What Tony decided to do was, we're going to start giving out money for any hackers to find any issues with the code and to find any bugs. Now, again, I mean, it's kind of like the hackathon that Zuckerberg did on Facebook. So I think this is a really good idea because, you know, you can never spot a lot of these errors. And even if you do find the errors, it doesn't mean that people are not going to keep on trying to exploit software. So I think if you embrace part of the hacking community and you give them an incentive to find these bugs, very similar to like Linux, where it's very open sourced, I think you'll secure the software a lot faster than companies who don't do this and have to do everything on the internal side. And the last one is that they're also planning on launching a token for what's called decentralized investing. So think of the CEO of NEO and the Nest Fund as kind of like an application of a little mini ICO, where they're going to use that within the Antshares blockchain to begin the ICO process like we saw here at the Ethereum network. So again, I mean, they're really kind of taking a copy of the Ethereum playbook and trying to replicate many of these things. Now, how this is going to scale, it remains to be seen, and also how many companies are going to bite, it also remains to be seen. But again, it's a really great idea in terms of of kind of trying to follow Ethereum steps and trying to replicate that model. Okay, now this is actually from the conference. We actually have a partnership with Microsoft, and I know some of you guys were wondering, okay, what type of partnership do they have, and what exactly are they talking about? So Raju here, I'm gonna have to see if I can pronounce his name correctly, Sir Kenneth Raju, Indian, I suppose, is the general manager of developer experience for Microsoft. And so they don't really have per se a very tight relationship as of yet, but Microsoft is exploring a lot of these relationships on the Azure cloud platform. And one of the things he mentioned was that he's going to support Onchain. And Onchain, for the guys who don't know, was the actual company that was built by Antshares. And there is a very close relationship between Onchain, Microsoft, and Antshares. And so the goal here is, and also Alibaba. So the other part is that Onchain is going to join Alibaba. That's going to power up this email evidence bank. And the way Alibaba is going to operate this is that they're going to use Antshares technology from Onchain, okay, to create what we'll call the Ali Cloud, which is Alibaba's cloud computing branch. So think of Amazon's cloud computing, but Alibaba is trying to use the blockchain from Antshares to begin starting up their own cloud. Now, again, that's going to give Amazon a run for its money, considering that Amazon dominates in the cloud space as of yet. However, Alibaba is already a force to be reckoned with anyway. So the bottom line I'm trying to say here is that although there is no direct relationship with Antshares and Alibaba, there is a relationship between Onchain and Antshares, and hence, again, an indirect relationship with Alibaba powering up that tech. So either way, Antshares is going to have to be involved in that in some way. Now, this is called the law chain, and it's pretty much what it is. It's a proof of existence for the blockchain, and it's used at the enterprise level. Now, something we don't really see at the Ethereum level yet. Now, remember, Microsoft is playing around with both sides, both Ethereum and also with Antshares. So this is really interesting because Antshares also received $4.5 million of investment through the crowdsource of funding when it was at a conference, the Yunkai Conference 2016 in Hangzhou, China. So again, money pouring in, very good. Again, trying to partner up with these companies that are trying to use either email or some sort of application using blockchain powered up by Antshares versus Ethereum. Okay, let's talk about Microsoft again. So Microsoft, one more time, they have that partnership they've called the legal chain or the law chain. They're going to provide these digital evidence, which basically includes contracts, medical records, and whatnot. And so very similar to Ethereum consortium that they have, Antshares is creating their own version of that out in China. And again, very, very important because I did mention in the other video that they had partnerships with the green light with the government. And one of the things is that although there's no full endorsement by the Chinese government per se, there is an indirect relationship with them because what they're doing now is that they're actually using this legal chain to try to work with the government, and the government is really actually good about that. So my speculation is, my theory here is that once the government begins to approve of these contracts, and it has to go through this entire process, the Digital Data Judicial Authentication Center, a subdivision of the NIC, they're going to be ensuring that everything is authenticated via the legal chain. So again, a very slow process because government takes a long time to begin processing these things. So we're not going to see like a full endorsement by the government. And again, people are going to say, well, they never said they have a full endorsement. But the thing I'm trying to say here is that when you're going with the government, you have to go through these legal proceedings and these regulatory filings, which take a while. Companies are well organized and are able to assimilate this information quickly, are going to be at the forefront and most likely have a monopoly on the situation later. All right, the other one's called Cheng Huang, founder of CEO at InnoSpace, and basically what that is an incubation company in Shanghai. What they're trying to do with that is that they're going to incubate about $29.3 million collaboration between the Neo blockchain and InnoSpace. And the whole goal is to transform Shanghai into working spaces, startup incubations, acceleration service, very similar to Silicon Valley. And the idea here is to create applications and companies that are going to utilize the blockchain or add on to it. Now, I can't emphasize how this is so important because when you're dealing with blockchain technology, you don't want to be stale. You don't want to be that one company that just has that monster technology that next year is going to go outdated. But what you want to have is these collaborations who are constantly incubating startups. And again, this InnoSpace CEO is going to be key in a growth driver moving forward. So when you're looking at these coins and you're looking for growth perspectives, right, you're not just looking at one person, you're looking at an ecosystem. And hopefully InnoSpace is able to incubate the right companies, which will eventually take Antshares or NEO higher. The other one's called Zhao Zhangpeng, CEO of Binance, and this is the one that was just released just recently. He's a former CTO of OKCoin, so one of the larger exchanges in China. And what he wanted to do was to take his idea and elevate this exchange into something a little bit more premier and high end. And his idea was to directly compete with Polo. Now you might say, I don't think that's an easy competition. I think it's going to be a really easy competition. I mean, because the startup, if they succeeds, it will pretty much speed up the transaction fees, and the transaction speed. And I think that Binance may have actually cracked it, because last time I checked, the amount of transactions they do per second is, I think, it blows Polo out of the water. The idea here is not to deal with coins anymore, but to trade directly in fiat. So for example, I don't want to go through Bitcoin. I don't want to go through Litecoin. I want to go straight into these currency pairs. So it will increase liquidity, and more importantly, it will attract larger investors, because many people don't want to deal with going to Bitcoin in 3 different exchanges. And so what he's trying to envision is an exchange where you no longer have to use altcoins to trade into the pair that you want to get into. Now, the other ones, they also have very strict rules for the coins that they offer, again, for liquidity purposes and for reputation. You don't want to be caught with some of these coins that people are kind of questioning on in terms of what they are. So the first ones they're going to only filter out is going to be Ethereum, Bitcoin, and NEO. And I might make the case that they should put Litecoin up there, but that's okay. But again, another very important part of this partnership. Okay, now let's talk about the fun parts. And let's talk about Antcoins and exactly how you can actually make a lot of money with Antcoins versus Antshares. And this may actually put the whole masternode thing into a tailspin, and it can actually have people going along the lines of perhaps holding Antshares could be a more valuable proposition. Now, the first one is going to be Antcoins, and this is going to be based off what's called the dividend payout model and the proof of stake model, which Ethereum, by the way, is going to be heading on. Now, I really like Antshares because they already have figured out how to do this proof of stake, while Ethereum is, well, let's just say, still trying to figure out where that's going to go, when it's going to happen, and how it's going to happen without destroying the entire network. So let's go and get started. Okay, nobody's looking at Antcoins, and I'll tell you why. Because everybody's focused on Antshares and the price and just going to the moon, that type of talk, which is not bad if you're gonna think about 2xing, 3xing your money. However, the real money I think in the long term, it's going to be Antcoins. So let's talk about what Antcoins are, just in a nutshell. Antcoins are gas for the network. It allows these transactions to be paid into it so that people can operate these contracts, just like the Ethereum gas is. It has 100 million max count, which means that they will never make more than 100 million, and these coins will be destroyed the moment they are used, which means that you can technically have less than 100 million depending on the usage of that network. You will get paid for staking Antshares. So for every Antshare that you own, you will get paid a certain amount. And the other thing is that you must use the Antcoins to execute transactions. So Antshares are pretty much worthless in that respect. Now, the payment will operate, where I say here, wallet payout only, but however, if you actually have the Binance exchange and account there and you transfer your Antcoins over there, you can technically don't have to bypass the wallet, and you will be basically getting those Antcoins. Antshares will only pay out in whole numbers, so you basically have to own whole number Antshares, just like a company, like a share for a company. For example, you want to buy Microsoft shares, you don't own like 0.5 shares, you own 1 share. And you will basically be getting paid 0.5 Antshares for every 1,000 Antshares you get. Now, I think there is a fraction to this, so if you own less than 1,000 Antshares, you will get paid a certain amount. Monthly, that's 15 Antcoins. Yearly, that's 5,475 Antcoins. Now, if you check the price of Antcoins right now, it could be like $2 or $3 or whatever it is. You multiply that out, and now you're beginning to see that you can get a yearly income just by staking the actual shares. So without having to do any mining, without having to put any large investment, and right now the price of Antshares, I believe, is $5. So for $5,000, you can get 0.5 coins daily. Multiply that, and assuming Antcoin price rises, then you're going to get some additional cash in addition to your Antshares. Now again, it all depends on the price of the Antcoin, and that's going to depend on the usage rates for the network. Now again, they get destroyed all the time, so kind of do the math a little bit. All right, let me give you an example of how this works, because I think this is very important to know exactly what that will look like. Now when I did this video, this spreadsheet, Antshares was about $8. Now it's about $5, so you're getting a huge discount right now if you're talking about staking. All right, let's assume you get an initial 1,000 coin investment for Antshares. So that would be cost of investment. Let's assume it's $8 for one Antshare. That's $8,000 cost. You will get a payout daily of 0.5 coins, which you can sell in the open market. As long as you don't touch the Antshare investment, you're fine. And you're going to get a yearly payout of 180 while the price of Antshares is $8. Excuse me. Which means that the price of Antcoins, assuming it's 80 cents, which is usually about 10% of the actual Antshare price, gives you a yearly income of $145. You know, 1.8%, that's pretty much nothing. However, let's change it a little bit. And what happens if you have 1,000 coins again, and you still invest $8,000, but now the price of Antcoins rose to $2? That changes things a little bit, doesn't it? So now, because of that, we're going to take the price of Antcoins to 2. Well, let's assume the price of Antshares went up to $20 because people are jumping on the bandwagon here. But now the price of Antcoins rises to $2 because of that price. So now your yearly income is $306 for a 5% return. So not too shabby, actually, if you think about, for a 5% on an $8,000 return. Now, let's talk about hypothetically, right? Remember in the last video, I was talking about how Antshares is almost the equivalent of Ethereum based on what you're getting, right? You're getting the Ethereum network, you're getting the dApps, you're getting basically the partnerships, you're getting the consortium, you're getting all of that. What if it is the price of an Ethereum, $300? Right now it's probably 200 and change. And the price of an Antcoin rises to $30. Now your yearly comes $5,400 for a 68% yield yearly, which gives you $5,000 yearly income for your $8,000 investment. Now let's assume you double your Antcoins, you double your Antshare investment to $2,000 for a $16,000 investment. Now you're talking hard numbers. Now you're talking about yearly income of $10,800. Now the whole point I'm trying to make here, guys, is this. If you buy Antshares at a lower price and you're staking at a much, much higher level, let's say 2,000, 3,000 coins, and you might say, oh my God, that's a lot of money. But if this thing takes off and the Antcoin takes off, your yield is going to be almost, you will be repaying back all your initial cost in a year, compounded for several times. Now, what's going to happen, and the reason you might say, wait a minute, why would Antcoins go up in price? Well, think about it for a second. You're going to need at least 1,000 coins, or I think it's a little bit less to get that payout. So as the price of Antcoin rises, it's very difficult to get this initial 1,000 coin investment. Now, I believe it has to be 1,000. Now, again, I'm going to take a look at this one more time, and I'll post something up to make sure this is it. But I think the 1,000 limit is actually a cap. So you do have to have a minimum of 1,000 coins to start off with. It's almost kind of like a master node where you have to have 1,000. So they're picking that number. And for you to get your payout, you have to get 1,000 or more. So as the price of the Antshares rises, it becomes very difficult for people to get these Antcoins. Now, if it gets very difficult for people to get these Antcoins, and again, for the cost of the network, then obviously it changes. Now, here's the thing. What's going to happen is you might say, why would Antshares want to have a high Antcoin if they're using that for transaction costs? Well, here's the thing. They can always change the price of the Antcoins. They can go like 0.001 Antcoin to power up the network, but in reality, that doesn't matter. The reality is that you do have that. As long as it scales, you've got that amount. So you can actually be earning a yearly income of $10,000 for a cost of only $16,000. Or even forget about the 2,000 coins. What about the 1,000 coins? Okay, so let's take a look at the exponential price increase in Antcoins by holding Antshares. As the price increases in Antshares, it will decrease the accessibility for Antcoins because you're going to get a price for those, right? So as this rises, you're not going to be able to get Ant coins. And eventually what's going to happen is Ant coins will most likely be traded on the exchanges. The second thing is Ant price increases as demand for the network increases. We see that with Ethereum. The more transactions you have on Ethereum, the higher the price for Ethereum. And the last one is Ant coins begin trading on exchanges further increases the price of the Ant coins. So in other words, as the Ant coins begin to gain traction, and right now there's only one exchange that sells Ant coins, and that's on 1980.com. It's a Chinese exchange. And the other one is that the point I'm trying to make is that the real money really is in the Ant coins, because they're the ones that are powering up the entire network, although the Antshares is what's generating those Ant coins. Okay. All right. So making Antshares. So the benefits to Antshares on the Binance is that now you don't need to have a wallet anymore. Now you could just put the coins on the exchange, and then it will automatically generate those Ant coins for you. And in the future, I'm going to predict that you can probably sell those Ant coins for additional money. So as long as you're holding it for the long term and you're putting in your stake early on, I think it's a great ability. Think of Ethereum when it was trading at $5, right? And all of a sudden Vitalik says, let's all go to proof of stake. Then at that point, you're like, oh yeah, I think that makes sense. But right now he's doing it midway. So anybody who wants to accumulate Ethereum is out of luck because the price of Ethereum is so high. The other one is that in Bittrex doesn't allow you to stake the Ant coins. However, Binance does. So you can actually keep those and you're pretty much good to go. All right, guys, so that's about it. I hope you enjoyed my video on Antshares and Ant coins, and I hope that you find something of value. I personally I'm really excited about this proof of stake model, and I hope it takes off, and I hope Ant coins takes off too, because it's a money generating machine, especially if you're staking properly. Okay, CryptoBada, hopefully you guys have a great day.